line moves a little bit more slowly in the sense that this, based on what we just saw with the RSP, it might not actually open all that bad. But if we are close to trend lower zone, negative 1500, negative 2000, if we're in here and not really seeing quick upward lift, yeah, it's a little bit more of a headache for the market to try to get the fade going in the upward direction. If we open and we're just kind of like negative, I don't know, negative 200, and then a reclaim of zero, you're probably off to the races saying, yeah, any bounce in memory names, I'm looking for fades here, long the market, right? That's that one. We'll save the Holy Grail for last because it measures from the opening print. The tick moves fairly quickly. It measures literally every tick every 3 seconds. So at the exchange level, if we open up down here, how quickly does this neutralize to zero? Question mark. Or does it at all? If we're in the first 5 minutes at the zero mark on the tick Q, great. Try to fade the gap. That would be a helpful indication. You pair it with this, you pair it with this. It's not like each one of these is completely isolated. But as a general framework, as a general dashboard to help us understand what the market's trying to do, this tick, if we can move from pretty oversold, right, into the zero mark quickly, then good, right? We will look for some upside there. If the tick is just heavy, and let's just say, listen to what I'm saying, if the high tick is negative 400, right? If the high tick is negative 400 and you're just bobbing around down here, that's not a market you want to fade. You don't want to go the other way on that. You really just want to let this thing be, shake out, and then maybe if you can manage risk against the overnight low and this rebounds, but you don't just want to start buying it if the tick Qs or the tick whatever is down here at negative 500. That's the high tick of the day, right? So let's just be careful of that. ES Futures, mission accomplished. Let's jump on over to the Spiders Cash ETF and let's see what's going on over here. Once again, we are getting that shake of the flag lows in the pre-market. We are at the lower bound of the weekly expected move. Right? We are here. You can see us here. So what does that mean? It's the same thing as the ES futures. The overnight low in this case will just be the lower bound of the expected move. So all we're doing here, right, is saying, okay, we're going to open right around in here. If we look below and, oh, that's too much. If we look below and fail the overnight low, reclaim the opening print, we look to fade the gap into the previous day's low right there. Okay, that would be a reclaim of the flag lows. It would be a reclaim of this low, and where we rejected, where we supported that very next day. Okay, that's 769.50 on the Spiders. That is your gap close framework. If you do this, right, you crest it and you go gap fill reversal, okay, bearish, right? Then we have the junction box right here, as we just said. If you support it, great, you're staying in the flag range. If you drop it, yikes, thin structure below. If the market goes gwagged fee, go with all gaps that don't fill immediately, you look left and you say, okay, there's no structure there. No structure there, and this is where everybody's backing up the truck, and we ask the question again, is this too obvious? Is this too obvious, right? Just like the bull flag up here, looks good, base case up, but a little too obvious, right? Well, here we go. Here we go. Let's shake, rattle, and roll with the move back down into these overnight lows, okay? That is what we got there. All right, that's it for the Spiders Cash ETF. If I were to clear this up and do it one more time, simplified pathing, we're opening here, look below and fail the overnight low, reclaim the 769.50s, come into the previous day's low. First impulse is gap fill reversal. In here, if you support, great. We are well on the way of the shakeouts complete. We look for higher over the course of time. If we reject this, yikes, into the thin structure we go. Caution, right? If we go gwagged fee, I would be careful shorting in the hole down here, but there's really not a lot of structure that's going to keep you elevated. This is the spot, right? Big daily higher low. Daily higher lows, but too obvious? Question mark. That would be down there. Should this market rip out of the gates here and then sideways is the situation we just pathed out on the ES. That would just be a reclaim of the neutral part of the range here. And that makes sense to me considering that we still have NVIDIA earnings in the pipeline as well as Jackson Hole. That is upcoming next week, right? So sideways there, just churning in this range, not the worst thing in the world. Okay, let's go ahead and grab a sip of coffee, and we will move on into the Qs, or I guess the NQ first. It's 8:44. We're doing well on time, actually. We're doing well on time in terms of where we're at as of right now. Nice sip. Let's continue along. Another sip. Hit the like button while we sip. I can get behind that, Matt Elves. Shout out, Matt Elves. Let me clear this up. 3, 2, 1, poof. And let's take a peek over at the NQ futures. Nasty NASDAQ. Let's jump on up Let's take a peek at the 4-hour chart to start and see what we're working with here. So, it's very similar. Same, but different in terms of what's going on over here. You've got yourself a re-entry into the junk drawer, right? If this is the junk drawer from back over here, we started to flag out over it. Well, psych, you're back down inside. One thing that's interesting from a 4-hour perspective on the NQ is that you have lows. You have this kind of higher low in here, higher low-ish in here. Do we just have a chance at a higher low right out of the gates